If we just saw an ongoing war, energy markets and share markets globally wouldn't really be concerned unless we see a disruption to oil supplies.
Are financial markets betting the risk of an energy supply shock has passed?
I do think they are, Kirsten. What we saw, of course, a week or so ago was a sharp spike in oil prices, well above $70 a barrel, and that was on the back of the fears that there would be a disruption to supply. Now that that threat has receded, I think investment markets, including the oil market in particular, are betting basically that we're not going to see a disruption to oil supplies. So consequently, you've got oil prices back below where they were when Israel first attacked Iran.
There's been a lot of optimism too among investors on equity markets, which traded higher after the US president's claim of an agreed ceasefire between Israel and Iran. Is that optimism justified?
Look, I think what we're seeing around the situation in the Middle East partly reflects the experience of the last few decades, that events in the Middle East seem to be having less and less of an impact on oil prices, on investment markets. And so we didn't see much of a fall. We've seen a bit of a recovery. But in the great scheme of things, the Australian share market's just basically gone back to where it was before the situation in Israel and Iran started up. I guess the broader issue is whether the share market is overvalued, and there are valid concerns on that front. The risk premium offered on the Australian share market, look at the earnings yield compared to the bond yield, is very, very low. And of course, earnings growth is now quite weak and could be negative for another financial year. So there are valid concerns that the optimism might be overdone, but not necessarily in relation to the situation in the Middle East.
Are you saying that as far as the war in the Middle East goes, financial markets are more concerned when it comes to energy than the possibility of an ongoing war between Israel and Iran?
Yeah, if we just saw an ongoing war, energy markets and share markets globally wouldn't really be concerned unless we see a disruption to oil supplies. We've seen that situation in relation to Israel and Gaza. Initially, there was concern that there might be a flow on to oil supplies. There was no flow on, and therefore investment markets started to look at other things. The exact same things could happen this time around. If the ceasefire between Iran and Israel fails, hostilities continue, investment markets eventually would start to look elsewhere if there's been no disruption to oil supplies. If the United States were to take military action again, then of course investment markets may start to get nervous, just as they did on the weekend. But again, unless you've got a disruption in the supply of oil coming out of the Middle East, I think investment markets would eventually look through it.
Shane, given the volatility of late, not just in terms of war in the Middle East and Russia and Ukraine, but also those largely unresolved tariffs from the United States, what key messages do you have for investors with their eye on the longer term?
Well, the bottom line is that uncertainty regarding markets remains high. Yes, we've got some good news just recently in relation to the Middle East. The situation seems to be de-escalating there, but we're now going to be refocused again on the tariffs, with the deadlines for the trade negotiations are coming up in July. So I think we'll see ongoing volatility, but the key for investors, particularly superannuation members thinking that maybe now's the time to switch to cash to avoid the volatility, the key, I think, is to maintain a longer term investment horizon, to invest for the long term, to realise that superannuation is a long-term investment, and that trying to time markets is usually very, very hard. By the time people get out, they then find the market's gone back up again, and by the time they get back in, they miss out on the rebound. So timing markets is very, very hard. The key, I think, is to stay the course and not chop and change.
Shane Oliver, thank you for joining the program.
My pleasure. Thank you.